we have more of a full service system. So let's enter the invoice and then receive the payment. So let's do that. So let's say we enter an invoice, boom, first tab, invoice, and I'm just gonna, we've done this a few times, so I'll just do a generic invoice, customer one again, and then I'm just gonna add that, and I'm just gonna say, all right, 17, that's fine. And then down here, I'm just gonna say this is service item 1, which I misspelled again. I'm cool with that. Service item 1. It's gonna be a service type of item that I'm gonna set up. And service item 1. It's gonna go into the service revenue account. The price, let's make it a good old $100. Description, service item 1. Let's get rid of the sales tax for simplicity's sake. No sales tax. And then done. So it goes into the service income. All right, boom. So now we'll put in just the good old $100. So what's this gonna do? Increase accounts receivable. The other side is gonna go to income. So let's go ahead and save it. Let's go into our balance sheet. Okay, paso, I said save and send. Save and close. And then let's go to our balance sheet, run it to refresh it. And the accounts receivable now, we should have our transaction in the A to the R. It didn't refresh. Let me go back, refresh it again, and then go into it otra vez. There it is. There's the $100. The other side, I'm going to go back, go to the income statement, run it to refresh it. Other side, $100 right there. And the service revenue, that looks good. Let's go to the first tab now. And then we would have to collect on the payment. So once again, you could say, well, what if I wait till it clears the bank and then I see the bank feed past the bank feed, and then I could try to match that to the transaction. You could possibly do that. We'll talk more about those options later, but most likely you'd have to go into the sales transactions here. And then when you get the payment, however the payment is formatted, credit card, cash, check, and so on, we can go into the sales items and search for the invoice, or we can go into the invoice item and search for the open invoices. So we want the ones not due yet. So there's customer 1, or we can search it by the customer, and then we're going to receive payment. So remember, if I select the receive payment form, this form, I could deposit directly into the checking account by selecting this and go, I want to put it directly into the checking account. If I did that, this form is acting like a deposit form. So I just want to look at the distinction between these two methods. So now I'm going to deposit this directly into the checking account. Let's check that out. Save and close. And then go into my balance sheet, run it to refresh it, and then go into the checking account. And you'll see that we have... let's go back again, refresh it, run it, refresh. Dang it. You should have 2 in there. So now we have this payment form acting as a deposit. So that might be doable if you have a situation where the payment is going to be grouped in the same format as will clear the bank feed, so you can easily reconcile it. It does cause kind of a problem, though, because now we have an increase, which is kind of like a deposit, but it's not using a deposit form. It's using a payment form, which is a little wonky. All right, let's do the other method where we and the accounts receivable went down here. Let's do the next method. Let's enter 2 invoices, and that's when we usually would have to use the deposit form and take them out of the undeposited funds. Let me show you what I mean. Let's make 2 invoices this time. This is going to be for customer 2, let's say. Customer 2. And this will be on 718. And we'll make it service item again. But this time we'll have 2 of them. And so that's going to be 200. Increase in accounts receivable. Increasing revenue. And then I'm going to say save and new. And then we'll do it again, otra vez, and say, we're going to say customer 3 also had a service item. which we will set up on like 1/9, let's say. And then we had service item, and let's say we sold 3 of these this time, 300, increase in accounts receivable, increasing the revenue, save and new. I'll close it up because I don't want a new one actually. And then I'll go to the balance sheet. Let's check that out. Run it to refresh it. Que paso? What happened in the accounts receivable? It didn't pull over again. Let's go back. Run it to refresh it. Sometimes this online, the sample company file does this more than like the normal file. So there it is. So the 2 and the 3, that looks good. And the AR, I'm going to go back. And then in the P&L profit and loss tab and to the right, run it to refresh it. We now have the revenue of the 600. That makes sense. Let's go back. Let's go to the first tab. And this time, let's find the invoices by going to the customers, just to switch things up a bit, closing the ham boogie so we can boogie on a bigger dance floor. And then we're going to open the invoice, open invoice and credits. And we have customer 2. Let's go into that one. And let's say we receive a payment, receive the payment. So this time I'm going to imagine that I'm going to get paid in some other way, such as with cash or say with a credit card or something. Let's say it was Visa paid us. So now I'm going to say, I'm not going to put it into the checking account. I'm going to put it into our undeposited funds so that I can group the money that's coming through the credit card, because it's not going to come in transaction by transaction. They're going to group some of them together, which I'm going to have to find some system to do on my end. Otherwise, the bank reconciliation will be a mess and I won't have good internal controls. So what's this going to do? It's going to increase the undeposited funds and decrease accounts receivable. Let's go save and close, or let's do save and new this time. Save and new, or save and send. I didn't want to send it. Let's save and new. That's what I wanted to do. And then this time I'll just type in customer 3. So I'll check this one off. And so once again, I'm going to say this came from the Visa. They paid us through Visa card. And we're going to say, okay, we got the payment, but we haven't deposited it yet. So we've got the invoice. And I'm going to say save and close. Save and close. And then if I go to my invoices, we've got paid on them, but they're not deposited yet. They're in undeposited funds. So these items are here that we receive, but they're in undeposited funds. And if I go to my balance sheet and run it to refresh it, then we have the undeposited funds has gone up. If I go into the undeposited funds, let's go back again and refresh it again. There should be 2 in there, shouldn't there? Refresh it again. Run it again, otra vez. There it is. The 200 and the 300 are in undeposited funds. The other side decreased. The A to the R, the accounts receivable. Accounts receivable should have gone back down. So there's those. That looks correct.